What's up, YouTube? Welcome back to the Wallet Monkey channel, where we give you all the credit intel you need to grow your wallet. Today, what I wanted to cover and kind of tap into here is the SBA, or Small Business Association loan program. Now, this is quite the beast to unravel. This is going to be kind of a general overview, and then we'll probably get into a series of videos where we break down the exact loan types and maybe some real world scenarios of people that have gotten them, right? So obviously, over the last couple of years, you're probably really familiar with the SBA if you weren't before, because of the EIDL and the PPP loans that came out on the back end of the COVID disaster relief, right? So that, I think, gave a lot of people an introduction for the very first time into the SBA. The SBA, for the most part, usually has amazing rates, like the pinnacle of rates, 1%, 2%, 3% rates, locking you into, I don't know, anywhere between a 10 and 30 year loan. So it's ridiculous, some of these loans. And usually they're more willing to work with individuals with bad personal credit or not strong business credit, right? Like, that's kind of the point of them. And they've got local offices all over the United States, and they work with other institutions and networks, conglomerates, whatever you want to call it, to help you get funding as well. The whole idea here is to help small businesses. That is the whole point of this. Okay, so let me also clarify another thing, is that being a sole proprietor or a partnership, you can actually just use your social security number, which then they will pull your personal credit. And they tend to pull Equifax. Mine actually fell off my report because I did get PPP and I think EIDL under my social security number besides the businesses. Because again, if you can prove that you've got any sort of side hustle to any degree, that you're just kind of like trading under your name, then you can usually get get in on one of their programs, right? With using your SSN, your social security number. Now, the micro loans, I think you can get into that, but just about everything else, it tends to have to be an actual business, 2 years minimum in business. You got to have receipts, you got to have tax returns, all that good stuff, right? So this is the main, I guess you could say, the main loans and programs that they offer, even though there's a lot more. And even this is kind of confusing. They've been working to consolidate this, but we've got micro loans, which are up to $50,000. We've got SBA Express, which is up to $350,000. We got 7A loans, which are up to $5 million, and then working capital, which is also up to $5 million, and it's similar to a 7A loan. So it's basically like micro loans, the SBA Express, which everything used to have SBA in front of it, and then they changed it, and then the 7A. That's basically like the three main types. Now there's others. There's nonprofit catered stuff and a few others as well. I'll show you in just a couple minutes, but okay, let's start there. Now let me pull up the other pages. Okay, so I want to start here actually really quick. Is I talked about if you're going to use sole prop, partnership, etc., they're going to pull your social security number, which means they're going to pull your credit report. I know, because they did hard hit me, so they'll hard pull you. And like I said, I believe it was Equifax. Correct me in the comments if I'm wrong. But on the business side is what they tend to look for from the FICO Liquid Credit Small Business Scoring Services, SBSS score, is a minimum of 140. Now they will pull from other things as well, like the SBFE, which is where most business bureaus get their data from. But understand that the SBA is usually looking for a minimum of 140 on this scale. So figure out a way to get this report in some sort of way so that you fit the criteria, right? All right, so the microloans. Here is the actual SBA website page. So the microloan program provides loans up to $50,000 to help small businesses and certain not-for-profit childcare centers start up and expand. As you would imagine, the requirements are not that stiff, are not that stringent, right? The average microloan is about $13,000. Now let's bust out my little chart here. Where are our microloans? Here we go, right here. Loans to nonprofit lending organizations, technical assistance also provided. Max $50,000. We got to scroll up. Percentage of guarantee. There is no guarantee, and there's no guarantee fee, right? Okay, use of proceeds can be to purchase machinery, equipment, fixtures, leasehold improvements, working capital, etc. Cannot be used to repay existing debt, and can't be used to repay personal debt. So that tends to be a deal breaker. Shortest term possible, not to exceed 6 years. And then what do we got? Maximum interest rate. Maximum interest rate is up to 8.5%. Again, some of these rates are like killer, absolutely killer, like 2%, 3% across, a decade is absolutely insane. Okay, that's it. So that is microloans. There's not really much on this page. It just kind of says the same thing I just went through on the chart. All right, next is we got the 7A stuff. Okay, so let's scroll up here and we're gonna do SBA Express first. So the Small Loan Advantage, SLA, is now the 7A. Okay, so the Small Loan Advantage, this is where it gets confusing, is now the 7A 350,000 and under model. Like essentially the SBA Express and the SLA are both also two 7As, but there's a 7A that is 350,000 or less, I guess. And then there's like the real 7A, which is like harder to get, and that is a maximum of 5 million. I don't know it, and I don't even know if I care. All I know is that with one, you get up to 350,000. It's got rules. The other 5 million, it's got different rules. And then we got cap lines for working capital, contract, seasonal, and builders. Okay, so this is what we're looking at. Focus on these two in the middle, because they're pretty much the same. All right, maybe used for revolving lines of credit up to 7-year maturity, or for a term loan up to 7 years for revolving lines of credit, including term out period. Otherwise, same as 7As, which you can again cross-reference that for yourself. Loans $50,000 or less, prime plus 6.5%, so higher rate. And then fast turnaround, less paperwork, and less things that proof that they ask for, right? So same as 7A, same as 7A as well. So if you wanted to look at the guarantee fees, I'll let you do a quick look up there. And who qualifies must be a for-profit business and meet SBA size standards. Show good character, credit management, and ability to repay. That means no derogatories on your business, no lates, no bankruptcies on the business itself. I assume that they pull personal into this a little bit. I don't know. I've never gotten a 7A personally. So once we get some firsthand experience, we'll chime in. Or if you got some feedback for us in the comments, let us know. Okay, prepayment penalty for loans with maturities of 15 years or more if prepaid during the first 3 years. Okay, there you go. So these two are essentially the same thing. I know that's bad to say that because they're not, but very similar. Now let's look at this 7A loan and the working capital. Kind of bring those two. Can I bring those two up on the screen at the same time? I'll make this a lot smaller. Okay, hopefully you can see that. Let's scroll up just a tad so that you can see the headings here. 7As first. So 5 million percent of guarantee, 85% for the loans of 150,000 or less, 75% greater than 150,000, up to 3.75 million. Use of proceeds: term loan, expansion, renovation, new construction, purchase land or buildings, purchase equipment, fixtures, leasehold improvements, working capital, refinance debt for compelling reasons, seasonal line of credit, inventory, or starting a business. Again, you got to show proof here. You got to show proof. There's going to be a ton of proof of income and paperwork pieces that you're going to need. Okay, maximum interest rates, loans less than 7 years. You see prime plus 425, prime plus 325, and prime plus 225. Loans 7 years or longer, same. Okay, so who qualifies? Same set of standards. Benefits of borrowers, long-term financing, improved cash flow, blah, 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 fixed maturities, no balloons, no prepayment penalty, which is really, really good. Okay, so yeah, that is similar to the cap lines. The only difference is that it is, yeah, that's what it was. So the only difference is that use of proceeds. So finance seasonal and or short-term working capital needs, cost to perform, construction cost, advances against existing inventory and receivables, consolidation of short-term debts, maybe revolving. So here's what's interesting is there are companies and places that will help you get these loans, like smartbizloans.com. I heard of this site from a few people that have actually gone through their services, claim they're really, really good. I don't have personal experience yet. The site is very well written out and there's a ton of data. So here's what you can expect. Personal and business requirements for an SBA loan if you did it through them and you didn't have just like an SBA office or person in your local town. 2+ years in business for a loan up to 350,000, which we already talked about. That's technically this SBA Express, not 7A, kind of sort of 7A thing, right? I don't know. And then we got the 7A, which is up to 5 million, right? Which is technically the 7A and the working capital. So this is those two, and that's those two. Minimum personal credit score, 650 here, 675 there. But the SBA, like, I think this is just to get more favorable rate, because I know that the SBA tends to take a lower score. Business owners must be U.S. citizen or legal permanent residents. Business and personal cash flow to service all debts demonstrated by tax returns and financial data. They're going to ask for a lot. They're going to make sure that you can cover the debt. Have no bankruptcies or foreclosures. Have cash flow that is sufficient to make the monthly payments throughout the life of the loan. They're going to ask for a lot of information, like I said. That's usually where people fall off, because they don't want to spend the time. Maybe they don't have it. Maybe their books suck because they're a small business and they don't really keep track of it outside of a shoebox. And so that's why I think, like, traditionally a lot of people don't get SBA loans. It's just because their personal bookkeeping and their business bookkeeping isn't that great. But if you can clean that up, then you can do really, really well. But here's the documentation. So this is just to give you an idea. This is what you can expect, right? Personal and business tax returns, personal financial statements, profit and loss statement, balance sheet, collateral, other documents. I have to note here that for a lot of these loans, they tell you flat out that their banks in their network, the Smart Biz network, will ask for collateral. Now that could be existing equipment, that could be existing inventory, that could be your space if you own it, that could be a lot of different things. But understand that, yes, you have to collateralize these loans to some degree, which again is very scary to a lot of people. Okay, this can, other documents, this can include entity and location documents, such as business licenses, articles of incorporation, which they're gonna ask for that, so just do it. Business license and article of incorporation is like basic stuff to ask for. Commercial leases, franchise agreements if you have one, commercial lease if you're leasing the property, right? So anyways, that's a look at what the most popular loans are and how to kind of, look through all that, because as you saw, like there's quite a bit in this document, like there's even more. So I told you there's other stuff for nonprofits, etc., and different programs outside of this, but it pretty much, they all kind of fall into similar guidelines of the 7A or this SBA Express, which is, like I said, not really a 7A, but kind of, sort of. And you've now got the expectations of what kind of paperwork they're looking for, where they pull in terms of bureaus, credit score expectations, all of that. So you should have everything that you need now to get started with the SBA, or at least be able to, make your final decision if you're going to get involved. If I've missed something or you'd like to add to the conversation some personal experience, I'd love to hear from you in the comments below. If you're brand new to the channel here and you like this sort of thing, take a second, hit the subscribe button, bell notification, turn it to all, and we'll see you again real soon in another video.